Hi everybody, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Apple, Nvidia, Tesla, AMD, Meta, and Amazon. We're going to go over these stocks, their charts, and their price targets, but before we do so, we have to talk about some key things that happened last week and some things that are happening this week that may influence markets to push back towards all-time highs or force them to pull back even lower to retest these supports. So let's go ahead and get started with the first and most important thing that happened last week, which was the release of the CPI data, or otherwise known as the inflation report. We see that inflation came in around 3%, lower than the previous month. However, it's still floating above that 3% mark and away from the Federal Reserve's target of 2%, which means that the longer it stays lingering above 3%, the more likely we're going to see interest rates remain elevated. Now, outside of inflation, last week was kind of a quiet week. We did see a testimony from Jerome Powell. He did reinforce the markets that there will be a rate cut later this year, but the Federal Reserve still needs to see more promising data before they implement that rate cut. So by the end of the week, the market was a little confused. We can see there was a little back and forth on Thursday and Friday. We pulled back significantly on Thursday, made it to all-time highs on Friday, but by end of week, we couldn't hold. Now, something very unusual happened over the weekend, and obviously, this is a very surprising event. There was an assassination attempt on President Trump, which is likely going to cause a knee-jerk reaction in the market on Monday, and will likely see a pullback. Now, nobody truly knows how the market will react to this, but given the fact that Americans now fear for safety, this could be a warning sign for the market early on in the week, but it likely will not affect it in the long run. Now, outside of that, focusing back on the economic front, this week we're also focused on more speeches from the Federal Reserve, specifically from Fed Chairman Powell again on Monday. So be on the lookout for that on Monday. Anytime Powell speaks, it tends to move the market, so you want to be careful with what you're trading on Monday while he's speaking. Apart from that, next up on Tuesday, we have US retail sales. You can see that the chart for retail sales has been very back and forth for the entire year. January was obviously a very negative number due to the fact that that's right after the holidays. We bounced back on February, slowed down on March, and went negative in April and barely scalped 0.1% on May. So retail sales have been back and forth. It's important to pay attention to retail sales because it kind of gives us an idea of how consumers are feeling about the economy and where they're spending their money. So pay attention to that number, because where consumers are spending their money could give you an opportunity for a trade. Say, for example, that they're purchasing a lot of healthcare and personal care products, then you know that there's an opportunity in those companies in that industry. Now, of course, we're jumping into earnings season. Last week, we saw earnings from, I believe, a few airlines, which went back and forth. But this week, we have earnings from very major companies. First of all, financial institutions. So banks will be reporting earnings. Banks are the backbone of the U.S. economy. Of course, we won't forget the fallout that happened a few years ago of the SVB bank. So what investors will be looking for on these earnings will be how much cash do banks have and how are consumers doing in terms of credit. So that's going to be the main two topics to pay attention to. Outside of banks, we also have earnings from companies such as Taiwan Semiconductor and Netflix. So these are the first two major tech companies to be reporting earnings. So these will be watched closely. Remember, Taiwan Semiconductor specifically does a ton of business with Nvidia. In fact, they're one of their biggest partners. So how TSM does is going to be a key indicator of how the rest of the semiconductor market is going to report. Looking at their earnings expectations, we see that they are also expected to grow quarter over quarter, but growth is expected to kind of be tamed down compared to what it had been. You can see there has been a plateau in earnings, so it's not enough that they just beat the number. They're going to need to beat the number significantly in order for buyers to buy up the semiconductor market. So keep that in mind. On Thursday, when TSM reports, which will be after market close, it will move the entire semiconductor market. Nvidia is included in that move. Apart from TSM, we also have Netflix, and Netflix is part of the Magnificent Seven stocks. Obviously, will be watched very closely. Netflix is also part of the FANG stocks. If you're not familiar with those, that would be FANG, which is Facebook, Apple, Amazon, Netflix, and Google. These companies dominated the market for a very long time, which means that Netflix's earnings will be watched very closely in order to kind of gauge how tech is going to do this quarter. Also, Netflix is expected to come in around the same number as last quarter, but it's a pretty good improvement from where they were last year. So overall, Netflix is supposed to grow. They're going to need to deliver on those profits in order for technology stocks to feel a little reinforced. Netflix earnings will also be a major market mover. So keep that in mind. Thursday after market close is going to be a key day for markets, and it will probably determine how we're going to close on Friday. Now, last but not least, we finally have more Fed speakers on Friday to wrap up the week. So after Netflix and Taiwan Semiconductor report their earnings, we have more Feds speaking on Friday. So that's also going to determine how we close out the week. So now that we've talked about the economic front, what we can expect and what we've already seen, let's go ahead and jump into our charts and talk about some levels. So we're going to start off by looking at SPY, and of course we're not going to start on the hourly time frame, we're going to start on the daily time frame. And the reason we do that is because it gives us an idea of what the general macro picture is doing. Now obviously we touched a new all-time high last week, but something very strange happened. We saw money coming out of the S&P 500 and it went into the small cap index, which is the Russell 2000. You can see that the Russell 2000 actually reached a new 52-week high last week. It is one of the only indexes that has yet to reach its all-time high, such as the S&P 500 did, and of course, such as the Dow did recently. So investors have been waiting for the Russell 2000 to move towards its all-time high for months now. You can see that it has been consolidating around the same range since December of last year, and it finally got that breakout that buyers have been waiting for, which means that money could be flowing to the small cap indexes and small cap stocks in the next weeks or in the next quarter. This is a very important event because it signals capital rotation. Capital rotation is a normal phenomenon that happens on the market, and what it means is pretty much that investors are taking money out of one side of the market and they're starting to move it to other sides of the market that are still not so overbought. We can all agree that many technology stocks are in a place in which they're considered overbought, and it's time for smaller and mid caps to start moving up in order for the market to have a healthy balance. So when you're watching SPY this week, take your focus off of it sometimes and look at IWM to see how it's doing. Sometimes there are opportunities in other sides of the market that may not be so popular or so obvious. Now, jumping back into SPY, just because it is pretty much it gauges the overall market, we can see that SPY closed near its all-time highs, but it still formed this strong selling day the day prior to that, which means that there is a risk of a further pullback or consolidation, especially given the fact that we have major tech earnings later on in the week, and the fact that we're coming off of a weekend where there was obviously an assassination attempt on an ex-American president, which is also an American presidential candidate. So with that being said, there might be a little uncertainty coming into this week. We may see a little more pullback, and here are some levels that we're focused on. For SPY, obviously, our resistance and focus is going to be that 563.67 level mark, which is the all-time high. Buyers are going to need to break out above that in order for them to move to our projected target of around 568. Now, to the downside, we have a support at 554.20. If SPY breaks below that level, it is still considered in a decent spot, but it would definitely lose the full-on confidence that buyers currently have. When we look back at the hourly time frame, we can see that there was a streak of winning between on Monday, July 1st, all the way through July 5th. We did not see a single red hour apart from this hour. You can see that buyers were very strong. And so if we break below this support area and back below this level, then this vertical move could be filled very quickly back towards 547.70 and even 542. Now, below 542 is when we would start getting a little concerned, because there was a consolidation period here for a few days that you can see there was a lot of back and forth. And so buyers are not going to be too happy to see SPY re-enter this range, given the fact that they tried so hard to break out of it. So if SPY enters this range again, we might see stronger profit taking, and we may retest 542. Below 542, we can free fall towards 533, and that is a very critical support to watch out for. So these are some levels that we're focused on in terms of SPY. Remember, we already said that Netflix and Taiwan Semiconductor are going to be major movers for technology stocks, which of course in turn will move SPY. So keep that in mind that by Thursday and Friday, we could be seeing any of these levels on this chart. Next up on our watch list is going to be Apple. Apple also closed near its all-time highs. Apple has been on an amazing winning streak. However, it pulled back to end last week along with SPY, closing just below the all-time high mark of 233.48, which is also our main resistance coming into this week. They're going to need to break above that level in order for Apple to keep its rally going. However, it's unlikely to keep its rally going before those Netflix earnings. Netflix earnings will probably determine where Apple closes out the week. Now, to the downside, we do have multiple supports before it falls into a red territory. However, if it breaks below 221.50, which was a major breakout point for it last week, we might start seeing that profit taking down to these two supports here. Next up on our watches is going to be Nvidia. Of course, this is going to be a major stock to watch this week. It always has been for the entire year. Nvidia saw a big pullback on Thursday. In fact, that pullback created what we know as a bearish engulfing, which is when a red day fully engulfs the previous day's candle, and you can see that that's what took place on Thursday. And then on Friday, even though buyers tried to bounce it back, you can see that it closed near the lows of that day, signaling that we may see a further pullback this week. Now, in terms of Nvidia, we are still bullish. We do believe the stock has more room to grow. However, it does need to calm down. It's very unlikely that we see Nvidia move back towards all-time highs in the short term. It's likely going to need a further pullback below these supports in order for buyers to regain that strength in order for it to push back higher. Nvidia has already had a phenomenal year. These small pullbacks don't necessarily mean that the stock is ready to give up completely and fall off a cliff. It just simply means that the stock is in need of a consolidation period. So Nvidia in the short term, here are some levels that we're focused on. But before we jump into the hourly, let's go back to the daily just so we can talk about the 10 and 20-day moving averages, which you can see that Nvidia has been going back and forth at. Your job as a trader at the start and at the end of every day is to figure out where the daily candle opened. If it opens below the 10 and 20-day moving averages, that is a bearish sign, and it likely will start falling towards the 50. And if it maintains above those levels, they will act as a support and they will continue trying to push it higher, such as they did here. Right now, it's a period of consolidation. You can see that there's a lot of back and forth, but you have to still keep in mind where the stock opens and closes in comparison to the 10 and 20-day moving averages. Now, Nvidia on the hourly time frame, our main resistance and focus is going to be 136.25. Above that level, our target is of course at all-time high of around 141.09. To the downside, Nvidia has a support at 124.40 and another at 115. We would not turn our sentiment bearish until Nvidia breaks below 107. That's when it can start being in a place of concern, and it may free fall towards that 92 to 95 area. Next up on our watches is going to be Tesla. Tesla, of course, had a phenomenal few weeks. You can see that the stock is trading at highs not seen since last year. But on Thursday, it saw one of the biggest sell-offs that it's seen in quite a while as well. It moved back to its 10-day moving average. It opened below it, but buyers were successfully able to close back above it on Friday. But just like Nvidia, your job as a trader is to figure out where the stock opens and closes in comparison to the closest moving average. In this case, it's going to be the 10-day moving average. For Tesla, considering the fact that it opened and regained the 10-day moving average, if it loses it again, it likely will not regain it and it will likely free fall. Here are some levels that we're focused on for Tesla. Tesla's resistance and focus is going to be 271. Buyers are going to need a breakout above that in order for them to move it to its next price target. Let's figure out where that next price target is going to be, and that is going to be right around 279.40. I'll show you guys how I got that in just a second. So 279.40 is going to be Tesla's target if it breaks above that 271 mark. The way we got that 279.40 is we looked back at its history to see where it saw major places of rejection in the past. Above 271, we haven't seen much resistance up until this area here, which you can see there was a major reversal back down. In fact, this is a reversal that sent it down for weeks to follow, which means 279.40 is a major place of resistance for Tesla, and that would be our next price target above 271. To the downside, Tesla does have multiple supports before it falls back into an uncertain territory. And of course, the most critical support is going to be 191. Below that level, buyers are going to not be happy about the fact that Tesla moved back into this consolidation range that they tried so hard to break out of. And so if Tesla loses 191, it can free fall towards 166. Keep in mind, these are very aggressive downside price targets. If you're looking at the downside, they're likely not going to happen this week. So we will update you guys on these charts next week. So make sure you guys check back in. Next up is going to be AMD. AMD also had a pretty good week last week, but you can see that the stock faced a triple top rejection right around our resistance of 187.70, which is the same resistance we had on our chart last week if you checked into our video. I'm sorry, a few weeks ago. Resistance and focus is 187.70. Considering this was a triple top rejection, it's going to take a lot of strength for AMD to break out above this level, but if it does, it will move towards 197. Remember, AMD is a major player in the semiconductor market, and with Taiwan Semiconductor reporting earnings on Thursday, the way that they end their week will likely depend on how TSM does on their earnings. To the downside, we do have multiple supports in focus. AMD will not fall back into bearish territory until it breaks below 149. Next stock on our watch list is going to be Meta. Meta had a great week last week. However, by end of week, it gave up the entire move and it moved back below its 10 and 20-day moving averages, retesting its 150-day moving average. So let's take a look at Meta on the short term to see where our focuses are. Meta's main resistance and focus this week is going to be 508. This was a major rejection point, so we need a breakout back above that level in order for it to re-enter a healthier bullish range. Right now, Meta is creating what we call a triple top bottom support at 492. You can see there was one bounce, two bounces, and three bounces. So buyers are feeling confident above that level, but buyers are also going to need to defend that level in order for them to avoid breaking below it and free falling towards 468. Above 508, the first price target we have on Meta is going to be right around 525, and the price target above that is going to be at all-time high. Remember, these are very aggressive price targets. It's unlikely that we see them this week, so make sure you guys are checking back into our next video so we update you on these levels. Last but not least, we have Amazon on our list. Amazon also, by end of week, gave up its move and moved below the 10-day moving average, retesting its 20-day moving average. Remember, you guys, we're seeing so many tech stocks pulling back, but the money is flowing elsewhere. We just mentioned that capital rotation is a key part of a healthy market. So as money flows out of tech, you want to look for where it's going. So make sure you guys are constantly scanning in order to figure out where opportunities are. If you don't know how to do that, make sure you guys check out the link in the description and you guys can join us for daily updates on the market and where money is flowing and which stocks are worthy of getting into. Now, in terms of Amazon, here are some levels to focus on. Amazon's main resistance and focus to start off the week is going to be 196.50. Above that level, we do have a price target of around 201.50, but it needs to break out with a lot of volume in order for it to touch those highs again. To the downside, we do have a breakout support at 191. The reason why that's a breakout support is because you see this rejection here. You can see that Amazon moved back and buyers need to break out above this level in order for it to hold a breakout. So that makes 191 a breakout support, which was this point right here. Below that level, Amazon doesn't have much support till around 185, and below 185, it enters a more bearish territory. So I hope you guys found this video helpful. Don't forget to subscribe and like, and best of luck for the week ahead.